Hey guys, welcome back. Patrick here. Are you ready to rumble? You had told me that the second dose was worse than the first one, and you were right. I was knocked out for the past couple of days, but now finally today I feel a little bit better, so I've been able to catch up with the market, and the shorts are very active right now. We are going to be battling them for quite a while now. In this video, let's catch up. Let's look at the short positions on IPOE, Sofi, Tattooed Chef, and also a new one, Beyond Meat, which I feel is primed to make a lot of money for people that want to take a chance on it. So let's get started, but of course, please like and subscribe. It really helps out, and I'll see you right after the intro. Alright guys, let's start with Tattooed Chef TTCF. I'm going to show you the Bloomberg terminal screenshot that my friend Chad sent me. But first, let's take a quick look at the graph. So as you guys can see, last week I made this video talking about how there was a short squeeze forming. And look at what happened. It has been going straight up from about like 16, 17, now up to $22. However, the things that I want you to pay attention to is, if you guys remember, I had mentioned this peak over here, which was going to be a resistance. Well, what happened? We are hitting against that resistance. So yesterday it went above it, but then it retraced back. So we're not exactly sure at this point if it's going to go through it again, or if now we're going to see a retracement of the stock. I don't really know how low it's going to get, or if we're going to make it through, because right now the shorts are going to be attacking the stock once again now that it's above $20. So all of this started really, I mean, a long time ago, but especially right around here, which is when they mentioned that the CFO resigned, right? So there was a lot of questions about this company's accounting practices and how they weren't very professional. They didn't have enough staff that were qualified for their accounting department, right, for being a public company. So that raised a lot of questions, and the number of shorts really accelerated when that happened, right? So look at this big down gap here. Right? Since then, though, we've had so many good news, and I have to give credit to Jeremy from Financial Education. He's always talking about this company, and every time they do something good, like when he talked about now they're starting to do tryouts in Europe, right? But I mean, they recently bought the factory that's going to help them get into the Mexican food. That's going to be big. Of course, there's the Whole Foods. They're expanding in Target. I went a couple days ago. Once again, the shelves were almost empty. I tried some of the bowls. Right, so there's a lot of good news with this company. So it's kind of a clash between the shorts and the bulls in this stock. I believe that the bulls are mostly small retail investors like us, and then you have all of the hedge funds that are trying to crash the price. So far, like, we're stuck against this one, against this peak right here. I really don't know yet if it's going to retrace or not, but of course I'm paying close attention. Now, what I want you to notice is two quick things. On MACD right now, we are in an uptrend, and it is going to take a couple of days. Let's say that all of a sudden, like, it starts to go back down. Well, we're going to get confirmation when the purple line crosses under the orange line, right? So that's how you notice the big trend changes. So far, so good, right? If we look at the 3 months, we are still above it. Let's zoom in real quick and see. Yeah, so even with the 1 month, we are still uptrending. So we'll see later on this week, right? Tomorrow, Friday, and then early next week, maybe the trend's going to change. At that point, maybe you can take a little bit off money off the table if you want, if you're ahead especially, right? But another thing I wanted to point out is that the volume is very, very low right now. Look at how, like, with this big dip downward, right, there was a lot of selling volume, and then the volume is really low. So now let's shift to the screenshot, and you're going to see this is very important, like the volume and how it affects the number of days to cover. So here it is. This is from my friend Chad. He's the one who invested $250,000 in CCIV at 18. I think he went with warrants though, and then he sold when the share price was at 60. So he made a tremendous amounts of profits, and he used that to get a Bloomberg terminal. So that has been a really, really useful tool. So thanks, Chad, for that. We can get so much information from this screenshot. All right, so first thing I want us to pay attention to is right over here. So this is the data as of May 14th. There's always a delay, right? But what we can see is that the number of shorts is really tapered off, right? So for quite a while it was going straight up. Now it started to come down a little bit, right? So it's still up 1 million, but the percentage increase is smaller than it had been for the previous couple of months, right? So they were not as aggressive in shorting as they had been before. And remember, this is from May 14th. And since then, the share price has really spiked. So the reason why the volume was so important is that if you notice right here, there was that sharp drop, right? What that caused is for the number of days to cover to spike and more than double. So the last time I did an update, we were at something like 4.72, if I recall, something around there, right? Right around here. And since then, look at how it shot up to above 10. That means the shorts, to cover their positions, would have to buy the entire volume of this stock for 10 days straight. When you get above 10, in my personal opinion, I'm not a professional short, but you are starting to see a little bit more risk here, right? That's what causes the short squeezes. It's when it is high like this. They're going to need to really buy and buy and buy to cover their position. So now, what did we see over the past week? We saw kind of less selling pressure. I'm pretty confident that they stopped shorting as aggressively, and some of them probably actually covered their position. So I fully expect that when we get the next update, this is going to come down a little bit. I'm not exactly sure where, maybe at 8, maybe at 7, somewhere around there, but the number of days to cover is going to be a little bit lower. Now, at the same time, the opposite is also true. The fact that the share price went from 16 to 22 doesn't change their opinion of the company. They still don't believe in it, and they think that they can beat the retail investors like us. So what's going to happen is that, you know, you have kind of this trend where they kind of let go on the shorting, the share price went up. Well, now that it's above 22, they're probably going to try once again. So, you know, we're probably going to see it going up, down, and they're going to keep doubling down and trying. So for us as long-term shareholders, as long as you're not selling, it doesn't really matter. It is just short-term blips. And worst case scenario, when it actually drops, you can buy more shares, knowing that at some point you are going to constantly see these little short squeezes. And over time, as the company keeps putting up good numbers, it's just a matter, it's not really if the company is going to go up in value over time, it's when it's going to go up in value over time. So this is great news in my opinion, right? I think that we're going to see a decline in the number of days in the next update, but so far that's what's caused the short squeeze that we've seen. Next up, let's talk about Sofi. This one is very complicated. On one hand, it is very similar to Tattooed Chef, right? Basically same trajectory. As you guys can see, it's been going up and we're in a nice uptrend, but at the same time it is a lot more complicated because we have the shareholder meeting coming up, and then we're going to have the ticker change, and then when the company actually merges, it is going to add shares to the float, and it's going to make it a lot easier for them to actually short the stock. Now that the stock is back to $20, it is very attractive for them to try once again to short it because there's more room for the share price to go down, right? They can try to bring it back down to 15 or 14 like they did before. This is a stock where, even though I love it long term, I think it has very, very good prospects, the valuation is still fairly high, right? The PE is going to be pretty high. So this is a prime target for them to try. So this is exactly what we're seeing, right? We reached that peak here, and then now it's going back down. There's going to be a mix of people selling at the merger, which we've always seen with all the SPACs, plus there's going to be the short. So it's going to be attacked on every angle, and this is why in the short term I expect to see a lot of volatility with this stock. So if we look at the terminal, this one has actually dropped in the past month, and that is why we saw that increase in the share price. Look at how it had peaked right around here in the beginning of May at 25.46 million shorted, right? And since then it actually dropped by 1.3 million, and now it's down to 29%. That is still fairly high, but again, if you look at the number of days to cover, when I made the update last week we were above 10, and now it's dropped to 7.56, right? So it dropped by over 25%, right? So now it's going to take 7 days for them to cover. It is very interesting. This is a case, as I was talking about, where we don't really know what's going to happen after the merger, right? There's a lot of different forces. So even though I can try to get my crystal ball out, but it's very, very difficult to like figure out what's going to happen. It's easier in a case like this to react to what's going to happen versus try to predict what's going to happen. So yesterday someone asked me what to do with Sofi. Should they be selling? First, guys, remember, I can't comment on people's individual positions. I'm not licensed. I don't know your circumstances. And, you know, I'm not the financial advisor. What I do think about this company, since I am a shareholder and I have warrants, the way I'm going to be playing this stock is I'm going to be reacting to what's happening. I'm monitoring it closely. I can't really predict what's going to be happening. So what I did is I do have my stop loss on the warrants. The shares isn't as bad because even if the shares drop, right, I can just keep selling covered calls and I'm making that premium. So, you know, it's just a cash flow generator at that point, right? So I don't really care if it keeps dropping. They can just keep shorting it. At some point in the future, it's going to go up. But with the warrants, it's a little bit different because you can't sell covered calls on them. So if the price drops, it is a pure loss on your part. Like, you're not making up that money in any way. So for me, what I'm doing is I have that a stop loss on the warrants. So if it drops below 7, it's just going to sell automatically, and then I can buy back shares when they're done actually shorting it or whatever happens with it. My strategy, I've repeated it a couple of times, but right now I'm not really interested in opening big long-term positions on SPACs until 1-2 quarters after they merge, because SPACs in general are just not very serious. It's extremely hard to take them seriously. Even the ones that are like more established and mature, like Velodyne, which has been around for a long time, now you have headlines like the founder is going to war with his SPAC, right? So these are not S&P 500 companies that are really well established and well run. So because of that, there's no big rush into getting into these, especially a company like this, which is in my top 5 right now. I don't want to lose all of my money with a play like this, right? So I'm going to keep the shares, use it as cash flow generator, selling covered calls. Whether it goes down, up, it doesn't really matter. And then worst case scenario, if my warrants are sold automatically through the stop loss, then I can just buy back shares in a couple of weeks, couple of months, once it starts to stabilize. All right, the last company I want to talk about in this video is Beyond Meat. Now, I'm not a huge fan of gimmicks like going for the short squeezes and all of that, especially on companies that don't have a lot of redeemable qualities like AMC and GameStop. To me, that's just noise. Like, it's not a repeatable strategy. However, there are companies out there that are shorted but do have a lot going for them. Beyond Meat is one of those companies, so I am interested in this one. This is a company that keeps having the same thing happen over and over again. So whether you want to play it short term with the short squeeze, well, you at least can fall back on the company's fundamentals if things go wrong. So let's look at it real quick. You guys will see this is another very interesting play. So let's make something clear. I prefer Tattooed Chef. If I was to only invest in one company long term when it comes to food, I would do Tattooed Chef. I feel like the risk versus reward is better. But when it comes to like playing the short squeeze and a short term momentum play, this one is prime for that right now. So Jim Cramer was talking about it yesterday. It was pretty interesting. He was literally trying to convince the Wall Street Bets people to do a short squeeze on this stock, and he's not totally wrong. I mean, in fact, I think he nailed this one, and look at what happened today, up 12% and a little bit more after hours. Look at the volume, 20.8 million compared to 3.1 million usually. So this one is actually ripe for short squeeze, and it has a long ways to run still, because look at this, right? So this was, well, as you guys can see, this stock has always been very volatile, but look at the beginning of January, right? Look at this massive spike from 114.05 to $221 in a matter of 2 weeks. All right, so this is a massive increase in price. You could have made a ton of money with that stock. Then after that, it crashed, right? But if you notice, look at the data, right? Look at how it had been progressively shorted more and more and more until January 15th, where it peaked at 15.4 million shares shorted, and that was equivalent to 3.18 days to cover. All right, look at what happened with the next data point, which is January 29th. This short interest was literally cut in half to 7.5 million, and it dropped to 1 day to cover. Well, look at the huge spike right here, right? So this is exactly what happened. Massive short squeeze in a matter of 2 weeks. Now, if you fast forward 5 months to the month of June, look at how we are starting to see exactly the same pattern. If you look at the data, we're starting to see exactly the same thing. Went from 7 million, now we're up to 14 million on May 14th, which is very, very close to what it was in January, right? Days to cover, 3.38. All right, so there is a massive short squeeze forming on this one, and it has begun right now. So I don't know if they're going to be able to cover their shorts really quickly, right? Or if, once again, they're going to be doubling down, and the higher it goes, the more they try and try and try. But this is another example of a company that, you know, has a good opportunity to do some short-term trading on it. Now, again, I said it before, I like Tattooed Chef better. I think it has a better risk versus reward potential, right? I feel like this company is very expensive. So I personally wouldn't want to be stuck with it with shares at 150 plus, but at least they do have things going for them, right? So they just announced once again that they're going to be partnering, and they're going to have their fake meat in KFC China, and they're constantly adding more fast food chains that are carrying their products. So the company is set to actually increase their revenues by, I think, 47% according to the analysts in the next year. So, you know, the company has some growth behind it. Again, I personally feel like Tattooed Chef has a better risk versus reward profile, but this one, like worst case scenario, if you're stuck with your shares, you know at some point, you know, it's going to recover. So this is a play you might want to look into. Maybe tomorrow I'll be open to open a position on it. I missed it today, to be honest, as I mentioned before. Like I was kind of out of it in the past couple of days, but this one I'm going to pay close attention to. So I hope you guys enjoyed this video. I hope it gives you an idea of what's going on with the shorts. They are very, very influential in the market right now. So we're going to be battling with them for quite a while now. I'll stay on top of it, and I'll keep you updated.